Well, today, ChartsToday comes to you from the Philippines. I'm working my way back from Sydney to London, and I thought I'd just stop for a few days on this great island here in the Philippines. So first ChartsToday of 2025, so I'll get back to my hotel and let's take a look at the charts. So I'm back in my room, and the chart I want to start with is the US 10-year Treasury bond. And there's been a lot of talk in the last few days about bond markets, but we have been saying all of last year, if we look at this monthly chart here, and if all I do is just do a simple regression trend on this chart, we see here how this trend is back from 1982. This is a monthly chart. It's a very, very long-term chart. Not many people look at monthly charts, but this is basically the monthly chart from the 1980s all the way to now. And we see here how this trend was just so clear for the bond markets, and this really broke down in the last few years. So you just can't ignore the fact that this multi-year, multi-decade trend has been broken, and we've gone into a move down into consolidation phase. Of course, if we make new lows on the bond price, that is really significant, and of course that has implications for yields, and with the inverse relationship. And we've got targets to 6.4% sometime in 2026, so that's a fair way away. This is a weekly chart. The great thing is you can do the targets on the weekly chart. Of course, you can do these targets on your Bloomberg as well. Just type @LinGo, and you can do these same targets on the charts. But this really big one, this target that was given in 2022, that was the buying thrust, and then it took over a year to be activated with a new high, and that's projected a target all the way to 10.6%. Now, that's in 2028, so let's not get too carried away. We've got targets to 6.4%, and when we look at the daily chart, we'll see we've got nearer targets than that. So that's the key thing. These bond markets generally, and of course there's a lot of news about the UK bond market at the moment, seeing record highs in interest rates or bond yields in the UK, but it is a global phenomenon, and is inflation dead? And that's going to be the story. But the chart is suggesting, if we look at that 10-year chart, that monthly chart, the chart is suggesting that this run in the bond market of 40 years has come to an end, and we are in a new downtrend for bonds, which is a new uptrend for yields, and so inflation, that story is going to keep running and coming back. That's what the charts are suggesting. So looking at the US dollar, that's looking very strong, of course. Fewer interest rates now projected for the end of the year. That's driving the dollar higher. The sentiment is increasingly that we will see fewer rate cuts on the US markets. So that is having an impact. And if we look then at the euro against the dollar, of course, that is weaker against the dollar, and we're sitting at we've touched 102.20. Really, this parity is coming back for the euro, so that is really quite interesting. And if we look at sterling, we see here that's falling away too. And if we look at some of the targets on the shorter term, this is the 0.25% target. That was the selling thrust given off the top. Then we had a little reaction move, which is the pullback, which locks that target. Remembering these are just invented from point and figure targets. There's nothing special here. We're just drawing them on time-based charts. And again, you can do these on your Bloomberg. You pull back here. We activate that extra level there as the activation of the unit. And the target here is 119.70. That's another 2.5% lower, and we're following the target. So you just can't ignore them. On Updater, of course, just hit the T key to draw the targets. Taking a look at Bitcoin, and this one is also very interesting. These upside targets were exceeded. Lower high here, if we break below this 90,600, let's say 90,500, we break below that level, we already have the downside target in place to 74,000. Back to the top of this range, what was resistance might be becoming support. We pull all the way back to the breakout level. So we do have a downside target some 20% lower. But this lower high, if we move below that
1,000 level, then that's a lower low, and then we really are looking to that target. So do keep an eye on that. And of course, the shorter term targets are going to tell you first. We're taking a look at the NASDAQ. Interesting here. Looking at the targets here on the NASDAQ, we've got these upside targets are in train. Targets been met all the way up here, and then suddenly we're starting to see signs. And of course, that bond market is a concern for stocks in time, but we do have still multiple upside targets, but we do have a new downside target, some 7% lower. So that's something to keep an eye on as well. Taking a look at some of the other markets, looking at the DAX, we've got an upside target not yet activated. That's orange. That would only turn to green with a new high on the DAX. And with everything that's happening at the moment in markets, that's probably less likely. Looking at the Sensex, this one's pretty interesting. We've had very strong views on the Sensex, the long term. If we look at this long-term chart for the daily chart for the Sensex, these buying waves through 2023, 2024, all giving upside targets, and now we're seeing negative sentiment creeping in and new downside targets. So that means we discount these upside targets more as we see the new downside targets creeping in. So India not looking as good for 2025 as it was in 2024. So that's really quite key as well. Taking a look at gold, again, really quite interesting here. We're just waiting for the break. A break to new, a break above 27.25 would activate this upside target to 3,025. So that's really quite key. Of course, inflation could be a driver for gold, and we've got on the weekly chart some very big upside targets for gold as well. And then if we break lower, then we activate the target back to 21.88. So we've got 13% upside, 17% downside. We've got to wait for the break. This one will turn green if we break higher. This one will turn red if we break lower. Take a look at your 60-minute charts for a heads up. I mentioned US 10-year yields. If we look at the chart here, we see that we've got this upside target to 5.2%. So that break of 5%, that was the limit last time in 2023, in October 23. We've got a target pointing higher. That was the thrust. Notice how these downside targets were given and met. So they were pretty accurate there. And now we've got the upside target pointing to 5.2%. So that's really where we're going for. And of course, breaking this high at 473.90, let's say 474, that's going to be significant. We might just see a little bit of resistance there in the meantime. Taking a look at some of the tech stocks, we've got Apple. Interestingly, we might now just start to see a bit of a deterioration in the tech stocks. Noticing here we've got new downside targets kicking in, so that's quite key. Taking a look at Microsoft, seeing much the same picture here. Meta, here we're waiting for an upside target to be activated. That would be activated with a new high for Meta, but for the moment we've got to make a new high to activate that target. And Nvidia, of course, the star of last year, the darling of last year, we've got upside targets, but we are seeing we've got a really quite clear engulfing pattern again this week, a bearish engulfing candle. We had one here that led to a fall away. These engulfing candles, another one there that led to a fall away in price. These engulfing candles you cannot ignore on Nvidia, so that's worth watching. That's it for today. I'm heading to Thailand and Singapore next, and then back in the UK next week. Until then, happy charting. Bye for now.